So today we are going to begin our lesson by looking at this question of December 2009, question 1B. December 2009, question 1B. December 2009, question 1B. December 2009, question 1B. And the question reads that Shahada Limited produces and sells product X. The product requires skilled labor and entails a learning effect in its production. An extract of the production hours for the product is provided below. We have cumulative production units and we have cumulative timing hours. The following information relates to the previous production period. Cumulative production at the start of the period, 528. Production during the period were 86 units. The standard and budget data for the product were as follows. We have budget production, 86 units. We have budget overheads, 150,903 shillings. Standard labor cost is shillings 10 per hour. Standard material cost is shillings 250 per unit. You are required to get the running curve rate and to get the unit production cost of product X during the previous production period. So when the examiner has asked you to get the production curve rate R, you need to ask yourself where we have the formula for R. You need to ask yourself where there is a formula for R. And where we have the formula for R is, we have two instances. The first instance is where we say B is the log of R, you divide by the log of 2. The log of R, you divide by the log of 2. So, for us to get R, is like what we did in our previous lesson yesterday. We said, you remember how we arrived at R is equal to the antilog of B logarithm of 2. That's how we arrived at R. Now, in our question here, we do not have the value for R, and we also do not have the value for B. Okay, null, I can see that. Good. So we do not have the value for B, and we do not have the value for R. So that means this formula cannot help you because it has two unknowns. And as I told you in the previous lesson, if you have two unknowns, you cannot solve one equation unless you have two simultaneous equations. So now this one cannot work. So we will say that also we know that if you are to get R, you multiply by Y bar T, it will give you Y bar T plus 1. If you get the current average, you multiply by R, you will get the next average. So the examiner here has already given us a table. The examiner has already given us a table where we have cumulative units. Cumulative units. And these cumulative units will be our X, as we said. We have also been given cumulative time. Cumulative time, which will be our Y. Now, with these two, we can be able to get our averages, because we will come here and say the average time will be given as Y you divide by X. And this now will be our YT. Will be our YT. Will be our YT. So if we have it that way, this opens the way for us to be able to answer what the examiner is asking. What the examiner is asking for. As you can see, we have been given 1 unit here, and we are told the total time is 200. So now, if you check and put these figures wherever, you will realize that 200 divided by 1 is 200. Then we are told at the double point 2, the total time is 360. So tell me 360 divided by 2 is what? Tell me the figure. You can either speak or you can type. Let's be fast. Be fast. Yes, good. I can see 180. Now that question, you can even stop at that point. It will be possible to get R. But if you just want to prove more, you come here and say, for the fourth one, we have 648. So 648, if you divide by 4, what do you get? You divide by 4. You get 162. Again, you can still stop there, but if you still want to prove more, you can tell us that 8 units, we are having 1166. So that gives us what is average. Waiting for the average there. 1166 divided by 8 is 145.75. So, as I said earlier, you already needed these two workings. And from this formula, we will be able to say that R will be given as Y bar T plus 1. You divide it by Y bar T. So you take the succeeding 180 you divide by the preceding 200. So that will give us the value for R. As 0. What? Yeah, 0.9. Good. And if you want to confirm with the others, it is the same thing. If you want to take 162, you divide by this. If you want to take 180, you divide by 162. That would be the answer. But as I said in the exam room, you only require these two according to this formula, and there you have your answer. So the next thing that the examiner wanted us to provide there is the unit production cost of product X. The unit production cost. So as I told you yesterday, you should always start the question from the answer. So when they ask us to get the unit production costs, we need to get the cost statement. Cost statement per unit of product X. Cost statement per unit of product X. And we said what you do, you look at the question and identify the costs that are present. So looking at this question, we can first of all see we have budget overhead. We have standard labor cost per hour. And we have standard material cost per unit. So we will start with material costs. We'll start with the material costs. Now that one does not require a working, so straightforward, we are told it is 250 shillings. We are told it is 250 shillings. That is straightforward. Then we have labor costs. Labor costs. Now, labor costs, we can either show the workings there or we come down there, but I told you the practice nowadays is to have the workings, kila kitu down there. There you just show the answer. So that one we are going to leave it blank for now until we do the work, the working. And what working are we going to do? The examiner has told us is labor cost 10 shillings per hour. So we must get to know how many hours are required to make 1 unit. And once we get those how many hours, we now multiply by these 10 to record the answer there. When we will have done that, we get something I told you is called prime costs. When you add direct costs, you get something called prime cost. It's good to have this understanding. You get prime cost. Then you bring production overhead. You bring production overhead costs or just overhead. Now, the examiner has already given us the overhead and the total figure. So that will also require a working. So we are going to leave it. And when we leave it there, we will then come here and be able to tell what our total costs our total cost per unit. You can even repeat that. You can repeat per unit, and no much harm, but we had shown it there. So that will be the end of our statement. That will be the end of our statement as per the requirements of the exam. So we can have the workings now below that. The workings. And we should always begin with what is very simple before you panic and forget everything. And starting with what is simple also encourages you to handle what is difficult. So the overhead costs, we will so for the overhead, so per unit, we will take this amount that is given there, 159.03. 159.03. We are told that the units that were done, they were 86. So give me the amount that will be there for the overhead. Waiting for that cost. $17.54.69. $17.54.69. Okay. So that one is recorded there. 1754.69. Let us now come to labor. When we come to labor, we are able to see that there is the running curve. And I told you when you see running curve, there are 4 things that you must secure very fast. One is R, which you already know, 0.9. The second one is A, the time taken to make the first unit. And you can see it is here. 200. So A is 200 hours. The next one is B. And B is the logarithm of R. So the logarithm of 0.9, which is to be divided by the logarithm of 2. So you must secure that very fast. Give me the answer to 3 decimals. Give me the answer there to 3 decimals. Minus 0.152. So B plus 1, that is the fourth thing, will be minus 0.152 plus 1. Give me that answer again. .848. So those 4 things, you must be able to pick them anytime you see running curve. The next thing that you need to pick, which makes them 5, is to know whether you are dealing with the average or you are dealing with the total. So tell me whether we are dealing with the average or the total. Do we require the average here or the total? Can see Gideon saying average for 1 unit. Good. The average for 1 unit. But this average for 1 unit will be guided more by this formula, this one. We get the total first, we divide by the units, then we get the average. You iterate per unit there. And what you can see here is that this company has been ongoing according to information 1, because they are telling us production, cumulative production at start of the period. So as at the start of the period, they had already done 528. But then during that period, they did 86. So this is a case of an interval that we talked about in our previous lesson. So I want you to, so this is an interval, is an interval total. The case of an interval total. So the interval will be arrived at, first of all, tell me 528 plus 86. 528 plus 86. Those will be how many units? That will be 614. 614. So if we are told to get Y for the 86 units, we are told to get Y for the 86 units, which we are told. You will say it is Y for the first 614 minus Y for the first 528. And I told you that this is anchored in the assumption that there is no break. So we assume that they never take a break. From the day they did the first unit, they have just been continuing. That's why the first unit must always be included here. and here. Then we get the interval of the 86 units. So if that is true, we proceed. And now remind ourselves, today we can remind ourselves that y is equals to axb plus 1. Y is equals to axb plus 1. That is the formula for the total. So if that is the formula for the total, then y for the 86, we already know our A. Our A is 200. So it is 200 multiplied by 614. You raised power 0.848. You minus 200 multiplied by 528. You raised power 0.848. So I would like you to work out and give me the answer. I can see 358.88. That should now be the final answer. And remember that these are hours. So per unit, it will be this 558.88. You divide by the 86. So give me the answer and give me to 2 decimals or 3 decimals. Give me to 3 decimals. Give me to 3 decimals. 64.638. 64.638. And that's unit labor costs. Unit labor costs will be 64.638 times, we had been told that labor cost per unit is 10 shillings. So when you multiply, that gives you 646.38. 646.38. So that is the one that you are going to bring here. 646.38. So add that and you tell me what will be the prime cost. 250 plus 646.38. Tell me what will be the prime cost. No, 896.38. 896.38. So now add to the 1754. Add to the 1754 so that you tell me now what will be the total cost per unit. $26.51. 2651.07. 651.07. So that is how you are supposed to work out. And as I told you nowadays, the practice is just to provide the answers. The workings are down there. Yeah. The workings are down there. So that is all about that. Prime cost is the sum of material and labor costs, which are popularly known as direct costs. If you look at our introductory notes on this topic, you will see that. Is that okay, Noon? Good. Look at our introductory notes of the topic. You will see that figure or that term. Nice. Now let us go to the question of December 2010, question 4B. December 2010, question 4B. You don't see the question. Oscar, have you seen it? Yes, Gideon, you can read for us now that you have seen it.
It reads, Yokali Molders Limited produces plastic chairs from recycled plastic. The company has received a 3-year contract for the supply of new model of chairs to be sold through a supermarket claim. Capital investment, additional overhead per annum, material per chair, labor per hour. Additional information. The contract required a skilled labor that cannot be increased above the current available hours. It is estimated that the available labor time will allow 5,000 chairs to be produced in the first year. The estimated time to produce the first chairs is 10 hours. It is estimated that a learning curve effect for labor to produce the chair will take the following form. That is y is equals to ax raised to negative 0.3, where y is the average labor hours per unit, a is the labor hours for the first unit, x is the cumulative production. The selling price per chair is fixed at 420 shillings. Assume that equilibrium of labor hours in year 1 will be available in both years 2 and 3. All cash flows occur at the year end apart from the capital investment. Capital investment has a nil salvage value at the end of the period. The company has a cost of capital of 15%. Required, the net present value of the contract, advise the management of the company on whether to accept or reject the contract. State other factors the management of Jokali Models Limited should consider before making the decision in a above.
Thank you. That's good. Again, as I've told you, we must always begin from the answer. We must always begin answering a question from the answer. So the examiner is asking us to get NPV. And you know that NPV is obtained at the present value of the inflows with the present value of inflows, you minus the present value of inflows, you minus the present value of outflows. So if that is how we get the NPV, we can arrange it in form of a table. We can arrange it in form of a table. We arrange it in form of a table, whereby we will have a column that is called details. Details, where we shall describe the items that we require. Then, as you can see, the project is expected to run for 4 years. So we have year 0. We have year 1. We have year 2. And we have year 3. So we need to identify what are the inflows. We need to identify what are the inflows. We need to identify what are the inflows. The inflows. And for the inflows, as you can see in this question, they are making sales. That is the only point, or that is the only place where they are getting money. So it is the sales revenue. the sales revenue. And this one, so we can say less outflows. Less outflows. Now, outflows, we have to check which items are taking money out. One of them is initial investments. Initial investments. The other thing that you can see is the overhead costs. You can see we have overhead costs. Overhead costs. You can also see that there is material costs. There is material costs. There is also labor costs. There is labor costs. And when we shall have done that, the answer that we get, the answer that we shall get, you know very well, is called net cash flow. Net cash flow. I want us to call it A. We shall get a figure called net cash flow. Net cash flow. Now, because these are periodics, we must bring them to we must get the present value, the PVIF. We must get the present value, the PVIF, and this will be for 3 years. And at a rate of what? We were told the rate of capital, the cost of capital is 15. So at 15. So this one, we can call it B. We can call it B. So that now will afford us what we call present value. And how do you get present value? It is A times B. It is A times B. Then finally, down here, I will now have to show my NPV. Sasa hii naipea kama ikiwa on its own line. Because I'll need to. So net present value. So the net present value and we had also been told to advise. So we can also give our advice there. We can also subdivide it like this. Tuambie take or reject, and we give a reason. We give a reason. So we shall do our advice there. So that is the format. Remember, I told you you don't have to get my arrangement all the time. But if you do that, it's very good. You can as well have the workings elsewhere, and then you combine and finally give us the NPV. Now, if we have done that, we now need to do working. So down there, I'll tell me working. We need to get the workings so that we can bring them to the table. We can bring the answers to the table. The workings. And we can start here. How do we get revenue? We know that revenue will be given as units sold. Units sold. Let me see, my things goes up where? Don't keep on moving my camera. It will be units sold multiplied by selling price. That is how we shall get the revenue. Units sold multiplied by selling price. So we already have been given the selling price. The selling price, according to this examiner, is information for 420. So that one does not require a working. But for the units, we require to have a working. We require to know how many units were done. And according to information 1, we are told that the contract requires skilled labor that cannot be increased above the currently available hours. It is estimated that the available labor time will allow 5,000 chairs to be produced in the first year. And we are told the estimated time to produce the first chair is 10 hours. Now, as I told you, anytime you see learning curves, there are 5 things that you need to establish. One is A, the time taken to make the first chair. We are told is 10. The next one is B. And before you get B, you need R. But in this case, the examiner has already given us B. Remember, B is given as the log of R, the logarithm of R divided by the logarithm of 2. And as you can see in the formula that is given in information 3, the value of B is negative 0.3. So there we already have 2 of the items that we required. Now we know R, we know B, because we already have the final answer. Then B plus 1 will be then 0.7. B plus 1 will then be 0.7. I think we have gotten everything we required. We have A, we have R, we have B. we have P plus 1. The fifth item is to know whether we require the total or not. So in our case here, we require the total. And if we require the total, we will write the formula. Y is equals to A x raised to power B plus 1. And as you can see in our notes, we have been talking of Y to represent total. And we have been talking of Y bar to represent the average. But the defining character is not Y. The defining character is power. So if you have been given power that is negative, that is talking of the average. Because we have seen consistently that B is coming out as negative. But if you are given a power that is positive, that tells you that you are talking of the total. So having said so, we need to come to information 1, and we are told the time that was available was enough to do 5,000 chairs. So we need to see first year. Now, first year, the time that was available for first year, which is our Y, we are told it was enough to do 5,000 chairs. So we'll say 10 multiplied by 5,000, you raised power 0.7. You raised power 0.7, so that you tell me what time is that? That 83.998. So we can call it 3884. Let's call it 3884 hours. 3884 hours. And the units that were made were 5,000. They were 5,000. So for the first year, we can be able to get revenue. We can be able to get revenue as 5,000 multiplied by the selling price of 120. Because we know the units made. That will be 600,000. So kibia hapa kwa your table in the first year, you put 600,000. Put 600,000. That is in the first year. Remember, year 0, we don't have revenue. So we go to second year. Now, second year, the time that is available, according to information 5, we are told to assume that an equilibrium of labor hours in year 1 would be available. That means they will be equal. Equilibrium means equal. So if they will be available, Null is saying it's 120. 120, oh, you already 120 metoka wapi? Ni kweli. I should not have talked of 120. I should have multiplied by 420. Thank you. So the selling price according to information 4 is 420, not 120. Thank you. So revise that. Revise that. Divide that. The selling price is 420. So that is giving us 2.1 million. 2.1 million. Thank you. Now back to year 2. The time that will be available will be these 84 hours. Because we are told they are equilibrium. Now what we need to do is to get the units. We need to get the units that were made. Now, according to the assumption that there is no break, you are supposed to take that from the time they began, they have not stopped. So if they began, remember we are looking for these eggs, this one. So the time that is taken in year 2 will be these 84 times 2. Because since they began year 1, there has not been any break. So the time taken is that much. Should be equal to A, which we know is 10. Multiplied by X, which we are looking for, and raised to power 0.7. So tell me this one, when you multiply by 2, you are getting what? $77.68 equals 10x raised power 0.7. So this one proceeds to become 776.8 is equal to x raised power 0.7 is equal to x raised power 0.7. Now, instead of introducing logarithms like we did yesterday, instead of introducing logarithms, what you can do, you can say is 776.8. If you raise it to power 1, which is divided by 0.7, the reciprocal, you'll be able to get x. You can either raise to the power reciprocal of this power or introduce logs like we did in the other question, but raising will be easier. So this is what you shall do in your calc to get the correct answer. Una press 776.8, then you raise, open the brackets. You open the brackets, you say 1 divided by 0.7, close the bracket, then you say equals. If you don't open the brackets, you get a wrong answer. So do that and tell me what would be the figure. $13,459. 13,459 is our X. 13,459. So that 13,459 It is now the total time the total units made for that year, or rather for the 2 years. So the units for second year will be 13,459. You less what had been made in the first year. What had been made in the first year, 5,000, and this will give you 8,459. That will give you 8,459. So with that, we are in a position to get revenue. We are in a position to get revenue for that year. It will be 8459 multiplied by 420. 420. $3,552,780. So that is the one I'll bring here. 3,552,780. So we go to the third year based on the same arguments. We go to the third year based on the same arguments. So our time that is available in the third year is still 38.84 hours. That is the time that is available. That is the time that is available. So just arguing to get the units like we argued here, the unit for this year will be how many? Again, being founded on the assumption that we have not taken a break. It will then be 38.84 times 3. 38.84 times 3. You multiply by 3. 10x raised power 0.7. And this one we can just go straight now that we know the concept there. We can say that 8.84 times 3. You divide by 10. Whatever you shall get here, you raise power 1 divided by 0.7. And that will give you x. So that one we can just combine and go straight. The same concept up there. $24,019. And you don't round up because the 20th one will not be complete practically, but academically, if you rounded, no much up. So the units for this year, the units that are attributable to the third year will be so far for the 3 years we have done cumulative. That's why in earning curve we have the word cumulative. So cumulatively, we have done 24,019. So if you realize what we did cumulatively up to second year, 13,459, you will be able to know for that year alone, that year, how many units did we make? That year alone, how many units did we make? 10,560. So that tells you that your revenue will be 10,560. You multiply by 420. 10,560 multiplied by 420. So this is 4,435,000. And 200. So we are through now with getting the values for the revenues. We are through with getting the values for the revenues. So now we come to look for initial investment. So looking at our costs, we can find the initial investment is 850. And that one, you know, is always put here in year 0. 850. The other years, we don't have the initial investment, just one off. Additional overhead, we are told they are 250 per annum. Those ones do not require a working. So we just come here. In year 1, we have 250,000, 250,000, 250,000. That way, that is for the overhead. Those ones don't require workings. Then materials we are told is per chair. So that one require workings. So let's come here and say material costs. Material costs obviously will be units made times cost per unit. In our working, material costs. So for the first year, year 1, you remember we made 5,000 units. And we are told that it is costing 300. So multiply that. 1,500,000. So hiyo ndio tunakuja tunaweka hapa 1,500,000. Then for year 2, remember we made 8459. Each at 300. Each at 300. $2,537,000. 700. 2,537,700. Then in year three, we made 10,560. 10,560 each at 300. Each at 300. Noor, do you have the question that we are dealing with? Yes or no? Yes. So if you have it, look at the table where we have the costs and tell me whether you can see the figure that I'm using. Have you seen it? If you have seen it, like the one seen. Good, good. That's where it's coming from. So in the third year, it is 3,168,000. Finally, we come to labor costs. Labor cost, if you look at our table again, you can see it's given per hour. So that also requires the working. So labor costs will obviously then be hours taken times cost per hour. Hours taken times cost per hour. So this one, we will not differentiate in terms of years, because we already have been told and we have complied with that each year has equilibrium time. So this will be 3884. 3884. That is the time that we have been using for each year. And we are told that each is 60. We are told that each is 60. So that 3040. So that 3040 is the one that we shall record here. 3040. 3040. 3040. That is the total cost. Now we can get to our net cash flow. So this one is straightforward. It is negative 850. The now trade. So tell me now year one. This 2.1, if you subtract this amount, three of them, what do we get as the cash flow? Year one. $116,960. 116,960. Let's do the same for year two. 5, that's 2, 240. Five, that's 2, 240. The last one. $784, 160. Those are the net cash flows. The PBIFs. How do we write do we get the PBIF? NR. You can read from the tables, or you can say 1 plus R raised power minus N. So, for the first year, it will be 1 plus 0.15 raised power minus 1, not minus 1, raised power 0. For the first one, what do we get there? You either use this formula or you get from the table. Uniambia hapa, that will be what? 1 plus 0.15. Yes, Nur. You can unmute and speak. You are getting 5,320,000. Where? This one. Not unless you are adding. We are subtracting. The answer we get must be less than 3 million. Because it is this 3 million, you less this, you less this, you less this. That okay? Five, that's 2040. So this one is 5, that's 2040. Okay. Nul, I can't hear you if you are speaking.
Yeah, it's 532,040.
Good. So now I was waiting for this one. Thank you.
Mwalimu, which table is that?
This one.
No, the correction.
In our MA paper, we don't have it. In our management accounting paper, past paper, we don't have that table. It should be there.
I'm asking for the correction one.
For the correction one.
Yeah, because I'm still getting the same figure. For year one, I think, yeah.
Which one?
We are talking of year two. I think we are talking of year two. Okay, okay.
2040. 5, that's 2. Are these the values? Are you getting this one? 5, that's 2040.
And let me confirm again.
Eh?
Let me confirm.
Okay. So I hope now we all agreed. So if we agreed that those net cash flows are okay, now proceed and tell me this value. 1 plus 0.15 raised to power 0 is equals to what? It's equals to 1. Good. So that is the higher. Then for the next one, you tell me raised to power -1. Raised to power -1. You have to put the value, the present value factor for the first year. 0.8696. Higher. Now make it to be 2. Make it to be 2. Seven, 5, 6, 1. I'll make it to be 3. Six, 5, 7, 5. So let's now get the present values. The present values here. So this one, when you multiply, you get -850. Tell me this one now. Multiplied by this. This times this. 101,708. 101,708.416. Let's go to the next. This times this. 42.275. 275. 275.444. Oh, 275.444. The last one. 515. 515. 585.2. So we have this now. Now that these are positives, those are inflows, we subtract the outflows. So in other words, tutakuja hapa tuseme this -850,000 plus 101,708.416 plus 402,275.444 plus 515,585.2. So you add them now. Adding is just the same thing as subtracting because you can see we have a negative value here. Getting 169.569. 169.569.09. 169.569.06. So here we will tell them to take the project. Take the project since NPV is positive. Take the project since NPV is positive. Yeah. So I don't know whether we have any question. Now, if we do not have any question for your assignments, I would like you to do December 2012. December 2012, question 1A. December 2012, question 1A. December 2014. Yes, we are finishing. Gideon. December 2014, question 1C. December 2014, question 1C. There is May 2016, question 1C. May 2016, question 1C. I think those are enough for practice. Those are enough for practice, but you can still get more going forward. So as I've always told you, do these assignments. They are not compulsory, but they are necessary. And scan your workings and send to me. I will mark for free. You scan your workings and send to me. I will mark for free. But if you're not able to do that and you still need the answer, that will then require you to buy my revision kits. you buy my revision kit, which contains some of the answers, or which contains the answers of these questions, at a cost of 1,500. The revision kit goes for 1,500. But I'm saying you can submit and mark for free. So we are through with that topic of cost forecasting. We are through with that topic of cost forecasting. Is that okay, Gideon?
Yeah, thank you.
So we now proceed to topic number 3, or chapter number 3. Our lesson is supposed to end at 8. So I have 20 more minutes to introduce. The topic is called inventory controls. It's also another wide topic. Inventory controls. Inventory controls. And write that inventory refers to the units of raw materials. Inventory refers to the units of raw materials, comma, work in progress, comma, spare parts, comma, consumables, and finished products, being held in the stores, at a particular point of time. Being held in the stores at a particular point of time. Yeah, that's what we call inventories. It is any item that you have kept in the stores for the purposes of the business. Yeah, but in FR, you only recognize inventories if they are sellable. If you are buying and then sell. But in our management accounting, we count everything. Because it could be used in the making of the product, especially in the manufacturing sector. Then another point is that when inventories are in the stores, they incur costs. Which are divided into 4 as follows. They incur costs which are divided into 4 as follows. So number one is purchase cost. Purchase costs. Purchase costs, and we write that this is the actual amount of money. This is the actual amount of money paid to the seller of the materials. Paid to the seller of the materials in order for the buyer to acquire. In order for the buyer to acquire ownership of the materials. In order for the buyer to acquire ownership of the materials. I think that is straightforward. Number two, ordering costs. Ordering costs. Ordering costs. Ordering costs. And write that these are costs incurred. These are costs incurred when an order is placed with a preferred supplier. When an order is placed. When an order is placed with the preferred supplier. It's placed with the preferred supplier. We'll stop, but it's still on the same point. Most of these costs are fixed or incremental per order. Most of these costs are fixed or incremental per order. Most of these costs are fixed or incremental per order, full stop. Any variable ordering costs. Any variable ordering costs is treated as part of purchase costs. Is treated as part of purchase costs. In the name of carriage inwards. In the name of carriage inwards. Full stop. Examples include Roman 1. Roman 1. Cost of preparing, comma, printing and sending order documents. Cost of preparing, comma, printing and sending order documents. Roman 2, follow-up costs. Follow-up costs. Roman 3, freight charges. Freight charges. Roman 4, transport costs. Transport costs. Transport costs. Yeah, those are the costs that we incur anytime we place an order. And one thing that I must point out is I know you did inventory in management accounting. But in your section 4, these costs were given straightforward, a single figure. You will notice here when we start answering questions, the examiner gives you a set of costs. And they expect you to classify, to know which one are purchased, ni gani za ordering, ni gani za where. That's the difference. So number 3 is holding costs. Holding costs. Holding costs. Holding costs, and we write that these are costs incurred. These are costs incurred in relation to keeping of inventories in the stores. Incurred in relation to keeping of inventories in the stores. Keeping of inventories in the stores. Full stop. They are variable in nature. They are variable in nature. Full stop. Examples. Examples, we have 1, cost of capital. Cost of capital, hii ndio mlikuwa mnaona sana kwa management accounting, cost of capital. There is another one we call insurance premiums. Insurance premiums, if you have procured your goods when they are in the stores. Number 3, we have what we call warehouse rent. You are paying for your warehouse. Warehouse rent. Number 4, we have what we call obsolescence and inadequacy costs. Obsolescence and inadequacy costs. Obsolescence and inadequacy costs. Salaries of the stores staff. Salaries of the store staff, those guys who are working there, salaries. Something else is debt and pilferages. Debt and pilferages. Debt and pilferages. Goods are stolen when they are in the store. That's holding costs. Number 4, we have what we call shortage costs. Shortage costs. Number 4, shortage costs. Shortage costs. And write that these are costs suffered by a company. These are costs suffered by a company when the customer fails to get. When the customer fails to get the required item, fails to get the required item at the required time. Fails to get the required item at the required time, since the item is out of stock. Since the item is out of stock. Full stop. These are the most difficult costs to remedy. These are the most difficult costs to remedy. The most difficult cost to remedy, since they are qualitative in nature. Since they are qualitative in nature and customer dependent. Qualitative in nature and customer dependent. customer dependent. Yeah, so those are the costs that we call shortage cost, or rather, I have not given you examples. They include one, lost profits. Number two, lost customers' goodwill. Lost customers' goodwill. Number three, cost of processing urgent orders. Cost of processing urgent orders. Cost of processing urgent orders. Yeah, so we have those costs. I think we are going to stop at that point. Then when we meet our next lesson, we will pick up from there. So thank you very much. Have a great Sunday.